Good morning, everybody. Hey, welcome to Thursday, November 14th. Glad you joined us today. Got some few things coming up that came up yesterday and a few earnings straggling in today that we'll talk about here in just a few moments. Uh, but, folks, listen, if you are getting close to retirement, what does that really mean? If you're 5 years out, you think about it, in 2008, when the market declined so much, it took every bit of 5 years plus to get back to even. So that's why I think it's vitally important, if you are already retired or you're 5 years out from retirement, that you make sure that you don't have too much risk in your portfolio. Let us help coach you into and through retirement. Call us at 863-382-0037 to schedule your financial x-ray, where we can determine how much risk you have in your current portfolio. It's never too late to find out how much risk you have so you can make the adjustments that are necessary. So, hey, Dave will be with us in just a moment. Look forward to our conversation today.
Right, FM, that's Pharrell Williams there. Good morning. We're at 8:40 now. It's 20 before 9, checking in on money and what's going on with your IRA and your 401k and the security of your retirement on Wall Street. That's why we do it, all right? Let's go downtown to Statler Financial Services and say hello to Phillip Statler. Good morning, sir. How are you?
Good morning, Dave. Hey, doing well today. It's warmed up a little bit, but I think we're going to have a nice weekend.
I think we are. We're going to put up with a couple of days of spit and rain on and off, but by Saturday it's supposed to be pretty nice. Speaking of nice, how do record highs grab you? The Dow, the S&P, both records, and NASDAQ still holding in up there in nosebleed territory, even though it wasn't a record yesterday. I mean, everything's hunky-dory on Wall Street if you look at the numbers, don't they?
Well, it sure looks that way, Dave. The Dow was helped out significantly by Disney yesterday. Disney was up, I think, like 7.5% yesterday. It's retreating a little bit this morning, but still, that was enough to kind of give the Dow that boost it needed to hit that new record high.
And 92 points up yesterday. That was a good day. And like you said, Disney even offset some of the disappointments in the Dow and gave us an increase and a new record. And actually, the intraday highs were considerably higher than that. So when you start talking about 27,783 at the close yesterday, that looked small compared to where we had a peak earlier in the day before there was a little downtick, a little about 2 p.m.
Well, yeah, it was. And, we had Paulson's testimony, so who knows what he said that may have given some folks that little bit of a shudder. And then, on top of that, Dave, you had the impeachment hearings yesterday, too. So there could have been something that was said somewhere in that hearing around that time period, too, that could have given some credence to that downturn, little sell-off in the market.
Yeah, we were kind of talking about it before we went on the air as to what prompted a little dive there a little bit before 2 p.m. yesterday, and neither one of us really heard anything that Paulson said that would imply it. Maybe somebody said something about their takeout Chipotle or something over the hearing or something. We don't know, but we had a little bit of a knee down and then climbed right back up into that nosebleed territory at the end of the day. So end of the day, it was a pretty darn good day on Wall Street. Which kind of brings us up to this morning, and we get our usual data dump for Thursdays out of the federal government. First-time jobless claims last week, 225,000, which is still abnormally low, but it is a 5-month high in terms of the number of people. I flippantly said before we went on the air, maybe it was all those layoffs from the vaping company, huh?
Well, that could be. There's a couple other companies I think I saw laying off people, but so you've got that going on there, but it came in at 225,000 for the week. It was expected to be at like 215 to 217, depending upon whose numbers and who estimates you looked at. So still more than expected, but you and I both know that we're still at full unemployment. Until that number really gets significantly higher, the unemployment rate's still going to stay down.
Yeah, there really ain't much reason to worry until we get up around the 250,000 number, and we haven't been in within a driver and a 9-iron of that now in probably a year or so.
Yeah, and so when we start seeing some of those numbers come into play, I think that'll be telling.
Understood. The other number that came out today was the Producer Price Index, which is fancy pants language for wholesale inflation. Showed up 0.4% last month, which was a little higher than the market expected, but the core gets rid of all those nice little electives like food and energy, was only up 0.1%, which was lower than the market expected. And we're into that time frame where I don't know how the market's going to respond to lower than expected inflation. It does tend to augur toward another interest rate decrease, doesn't it?
Well, yeah, you and I were talking about, is that a good number or a bad number? I guess it depends on what side of the fence you sit on, right? I mean, prices were lower on the core, which was a good thing, but that means inflation is not ticking up to where the Fed wants it to be, and from their perspective, that's a bad thing. So it kind of is a little bit of a mixed signal.
Yeah, we really don't know how we'll find. We basically, it's one of those settings where the rules of thumb kind of go out the window because the market responds based upon the tea leaves they read from the government response to these numbers, and we don't have that quite yet, obviously. We'll find out what the effect is when I go through the overseas markets, but two things affecting our major trading partners, both Germany and Japan over the last 24 hours, have issued economic growth reports. Their gross domestic product not growing at the rate that they were expected. No, not recessionary. It's not shrinking, but at the very least, they're growing slower than expected, and that's been a disappointment to some, and it's putting some downward pressure both on German and Japanese markets this morning. Into earnings season here, what are we looking at in terms of indications? I know there's a lot of household names that are reporting, and some of them are on my big winner and loser list, I bet.
So we had Walmart come out, which is, they're a pretty significant retailer in their battle against Amazon. And they beat by about 7 cents a share. They raised their full year earnings outlook, which is always good. Comparable same store sales were up 3.2%, which was ahead of estimates. And it's the 21st straight quarter of raising their same store sales. So good things there. Revenue, though, was a little bit below forecast. They've been helped by their effort to increase their online activity and their online e-commerce sales, including groceries. And so that's been a good thing for them, and that's helped them significantly. They're trading up about 1.9% this morning. They will actually open at a new 52-week high day.
They're about in the middle of my big winner list this morning, so the fact that they toed all the marks doesn't surprise me that much. Yeah, the grocery pickup service is getting interesting. You get kind of a microcosm of that watching the Sebring Walmart. When they first put those pickup parking spaces up, they were vacant. Now when I drop by there, I'm seeing 5, 6 cars all sitting there dutifully waiting for the groceries to be delivered to their car when they order ahead. So that's working in brick and mortar, at least on Walmart's level, isn't it?
Well, I think it is. And if you think about it, I was talking to somebody yesterday about this specifically, it helps people be more budget conscious of their purchases. If you walk into Walmart and you're going to buy groceries, how many times do you walk out with a bunch of other stuff? And if you can order it online and it comes to your car, you resist that temptation to pick up something you really didn't need.
Which is one of the reasons I'm surprised that the brick and mortar folks are doing this as eagerly as they are, because those end aisle displays for the impulse buys, I mean, they say that adds 10, 15% onto an average grocery purchase.
Well, I think you're right. It does. But I think that they're trying to compete with everybody else. And one way to do it is with this pickup service.
Oh, yeah. Other indications from the companies reporting this morning.
So we had Viacom, CBS yesterday or the day before. We had Viacom today. They beat by 4 cents a share. Revenue also came in ahead of forecast. They've had a good domestic quarter of advertising revenue, which was good for them. And they're up, getting close to 3% right now.
Another one that's on my big winner list. You're just coming up roses for me today, Phillip.
Huh? Hey, this one we won't be on your list anywhere, but Canopy Growth. We talked about Tilray yesterday, another cannabis growth producer. They had a larger than expected loss for the quarter. I don't have the exact number. They said they had a lot of restructuring charges that they had to take. Revenue did come in higher, kind of the same thing that happened to Tilray. They missed on EPS, but they were ahead on revenue. And we don't really have, like I said, a number for them right now. They closed yesterday almost at a 52-week low at $24.45.
And my proverbial question remains, how in Sam Hill can you lose money selling weed?
Well, it now becomes a regulated commodity. If you
Hmm.
call it commodity, and so regulations become an issue. Um, and I think that's part of it.
Probably is.
Yeah. So next week,
Healthcare.
yeah. So now we have
I'm.
Cisco Systems.
They are
Cisco,
not my big winner list this morning. Must not be good news, huh?
they're not, huh? Well, they beat estimates by
Nowhere close.
3 cents a share.
Yeah.
Yeah. Revenue beat forecast.
Yeah.
So looking
What
good,
went wrong?
right?
What went
Well,
wrong?
weaker than expected current quarter forecast. Slowdown in global technology spending, down almost 6% this morning.
Yeah, I was going to say their investors didn't like that guidance one tiny little bit. They're at the top of my listing of big losers this morning.
Yeah, I bet they are. I bet they are. Hey, that's the last one I think. Yeah, that's the last one I have. I did see, I'll throw this out there because it's not a Main Street analyst following, but there was one headline that caught my attention that downgraded Apple to a sell.
Whoa.
Yeah,
That
yeah,
that borders on catastrophic for Apple standards because everybody's considered them the glamour stock of every tech portfolio.
yeah. So, and I don't recognize the name of the rating agency that came out with that, but yeah, downgraded to a sell.
Maybe they've been investing in that legal weed.
Maybe so.
Resetting the table for the morning. It was a green day on Wall Street if you were into anything but tech. Dow was up by 92. S&P was up by $2.20. Both set new records. NASDAQ was in the red, but not by very darn much, just under $4 yesterday. 45 minutes before we open, Phillip, are we going to be able to keep that green going today?
It does not look like it right now, Dave. It looks like we're going to see some declines today. We've got the Dow down almost $50. We've got the S&P 500 down 7, and we got the NASDAQ down almost 24 and a half. So if we look at the commodity side of things, we've got gold and silver trending up by almost 0.5%. And we got that ugly black stuff going up 0.75% today. Crude oil, $57.55 a barrel.
No, poo on that. Overseas markets not happy. I mentioned Japan and Germany with some not positive economic reports. Everything's pretty well red. Asian markets red ink when they closed this morning. Europe is between 1.5% down midway through their day as well over there. So we're not getting any help from across the pond as far as buoying us back into green ink. Somebody need advice to be able to sort through the risk in my retirement portfolio, Phillip. How do I get an appointment for help with that?
Folks out there need to be coached into and through retirement. That's what we do here at Statler Financial. And the place to start is to find out how much risk you have in your portfolio. Call us to schedule your no obligation financial x-ray review of your current portfolio. Call us at 863-382-0037. You can always go to our website, statlerfinancial.com, get a lot of great information there. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on News Talk 730 a.m.
And a regular listener reminder here, the noon one this weekend ain't going to happen, but I think it might be the last time this football season we get preempted.
Well, that would be great to finally get through that and be able to be at that noon spot.
Yeah, it will be back. I guarantee that. I hope this is the last time. Phillip, thank you so much, and we'll catch you tomorrow here, all right?
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done